Doc here from North America. Good morning, good afternoon, and good evening. So it's kind of like the first day of the week for us in the States, for us electronic traders and globalists, or not globalists, global traders, not globalist, but global traders. You know, it's a second day now. We've seen yesterday's action is always going to be sloppy because you lose 60-70% of the volume of world trading. So, you know, it's not the best thing to try to judge. I know that we saw silver starting to move up, and then all of a sudden it weakened today, and so forth and so on. I think you can see. Let me just double check if you're seeing everything. Just double check, see how it looks like. But so good morning, good afternoon, and good evening from Doc on the American first day of the week. There we go. All right. There is the Swiss. Where's the Swiss? Let's see what we have up there. Let's get the Swiss up there. There was copper. See how the dollar's going, because we're seeing all kinds of action in the dollar in the sense of direction. The different pairs trades are moving in odd ways. I heard a really good example of it this morning. It was called the bicycle effect, and that is that because of how do we describe it? I guess because of the way the central banks are printing money, if you don't keep on pedaling, you fall over. So in other words, it's going to be printing and then printing and then printing again, and just keep on printing until you can't print anymore. And when that happens, that's going to be the fun time, I guess you could say, for us technical traders, because I'm sure we will spot that before. And then obviously, the funds will get crazy and they'll start to move and so forth and so on. But yes, the bicycle effect. I thought that was a really great name. Now you can see here this morning, Swiss is trying to move up. You can see the green hinky ashy. You can see the white line down here on the J4X also at the same time trying to lift up. We're seeing that strength in there. And at the same time, let's go over to Chicago Quant and see what it's doing on the Chicago Quant and see. Let's look at fact check spreadsheet. Fact check spreadsheet shows 1 week in a weekly buy. So it went into the weekly buy last week, but 1 day in a daily sell. So we're really jumbled, I guess you could say. Let's take a look at it over here. Jumbled. A technical term. That's a technical term. Jumbled. All jumbled up. Okay, and you can see here, there is the weekly right there. It went into the weekly on last Friday. So we'll slide that in like so. There. Oop, not that. There we are. And you can see it's doing a little challenge to it. Matter of fact, you can see right there, it is a minus over on the right side there. Can you see that? Yeah, you can see that right there. It's a minus for the moment. And you can see here, it's trying to lift up. We're getting a volatility signal just like the way J4X is doing down here. Doing the same exact thing. See, it's trying to go up right there, just as we are seeing it on Chicago Quant right there on the daily. There it is. So we'll see how this all starts to play itself out. Again, it's the second day of the week here for the States. First day of the week in the States here, and second day of the week for the globe, for the world. All right, and so that's the way the dollar is moving at the moment. Now we'll jump over to, say, like the euro, see what that's doing. You see the euro is doing a little flirtation there with the daily sell. Right there, it's minus. Let's fix that so you can see that on the screen itself without me having to say it in any particular language. Let's see. Right there, style. What is that? That's the white line. I don't know how that got reversed. It's reversed, isn't it? How's that reversed? The histogram. Oh, okay. So it should be. I guess it should be the. I don't know. I'm not going to change it. I'm going to leave it as it is and just put that like that in there, and it'll show you. See, that is in the minus. So say okay, close, and you can see right there. It's minus right there. See that right there? Minus. And so the white line is trying to go minus, and you can see right there, the white line is the 4 plot. I don't know why it's reversed and not black, or green, but in the end result is that it's minus 54 or minus 0.00055 at the moment on a tick. and the plot 1 is minus 0.0026. So they're pushing down here at the moment. All right, and that's the euro. But you can see it's been in this channel for a while, and when we scroll over like that, you can see it's played with that channel for over a year now. It wasn't until August of last year, 2020. Yeah. So it's over a year now. It's been trapped in that range, and then it. I guess that's it was down there. So it's been a whole year we've been trapped in that range. That's why we keep those lines up there to watch how it bounces. Sometimes it extends beyond the top part of the range by a little bit, and then finds a way to roll over. Now, when you're trading binaries and options, it makes it a lot easier. You're not going to get stopped out from that. You have a limited risk factor there. When you're trading the spot, you want to trade that spot in a much more shorter term basis. So. All right, and then we go over to the cable. So, let me just say this about all that too. And that is, you can see we are going in a third week now on the weekly buy there. And when you look at it, you can see here, I think we saw the Aussie do that too. Aussie shifted gears 1 week in a weekly buy. See that on the fact check spreadsheet? We'll highlight the ones right there. So Aussie went into a weekly buy this week, a 1 right there. Cable went into a weekly sell last week, not this week. There's a 1 there. The Euro Zolty went into a weekly sell, and the Swiss went into a weekly buy on a 1, and the Euro Aussie is going into a sell last week in a 1. So we have about 4 products that have made shifts. So at one time we used to count that. There was a time where we observed these things. We mutate as traders. What becomes important, what doesn't become important, what people are interested in, what people are not interested in. And so you can see here the case of where we used to look at things that went into weeklies and see how long they're going to go. Because look at the silver. Silver is 17 weeks in a sell now. See that line 9 on the fact check spreadsheet. And platinum is 18 weeks in a sell. But actually we are flirting with a weekly buy in silver for the first time in 17 weeks. That's like, wow, something's going on there. So we'll see. Let's see if it lasts for 1 week or if it goes on for 17 weeks on the upside. Who knows? That's what the beauty of our math is that it reconfirms it week after week, lets you know that what the overall trend is. And just as it went into a 1 here, you can see in the euro, it fell down from the 122s up in here, all the way down to a low of the 117s. So there's 5 handles. It's a lot. And it did it over like a 4 or 5 week period or 6 week period or something like that. Was that 1 week, or 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks? 6 weeks. It fell all the way down into the 117s, low of 117.57. So you never know. You just don't know when it goes to a 1 that the next week might be a 2. The only way you know is watching Doc. Tuning into Dukascopy and watching Doc's weekly numbers play their adventure. All right, now let's jump over to cable. And you can see that right there. Let's put it up on J4X cable. Right, let's see, cable, right there. There it is. So on J4X, we'll let that calculate. On, there it is. And you see J4X is trying to push into the sell here today. Over on Chicago Quant, same situation. See that? It's trying to push into the sell. Last week we closed in the weekly sell there. And you can see we've been playing with Bollinger Bands on this one. Someone asked about Bollinger Bands. We left them up. Who knows? Maybe over time we'll take a check, see what's going on. And then I think what we did is we put Doc's math, which makes Bollinger Bands like a 3-dimensional Bollinger Band. Right there, the time manifold. We made the same colors, just to emphasize the difference between a Bollinger Band and the Doc's nonlinear time manifolds, which was discovered back in the 2017-2016 era. We realized that using our mathematics and combining it with 1 standard deviation and a 2 standard deviation gave great insight. That's what the gas is all about. When we look at our gas indicator versus gas lines indicator. And so we find that fascinating. And if anybody cares, we can always throw a gas on a chart and show you what the difference looks like. It's a fascinating thing. But that's why you see the Bollinger Bands here on the cable. Now let's just look at the cable itself through the eyes of J4X and Doc's work. And you can see the pressure breaking down. You can see a red hinky there. Over on Chicago Quant, Doc's work here, you can see same situation. That's why we recommend using the J4X and the way we interpret it and the way we observe it, through the slow and the fast. Well, the white is the fast, the dashed is the slow, stochastics. Because we use that to smooth our mathematics out by, with our math itself, the formula. And so they have a lot of characteristics. It's just a little bit delayed. Maybe the J4X is 4 hours behind, but still it catches up, And that's an interesting factor itself. The fact that something can be less accurate, but it does catch up over time, tells us why we have the time manifolds. There's a good example right there alone. What is time really? How's time really work? And that's something we work at in physics all the time. And Doc has come up with a formula over the last almost 50 years now, how time works differently in a spatial way. And that's what we do. We use it on every object that's moving. It's like good old Al Einstein's thing there, where Al Einstein wrote a paper back in 1905 that said, what was it? Bodies moving on an electromagnetic field. Somehow or another that was mutated over time into something called relativity. But it was still following moving bodies on an electromagnetic field. But today, most people, I trick physicists with that a lot. It's really fun. You talk about objects moving. We look at charts here every day, looking at the way these objects move on a chart. And once in a while, you'll get some young physicist, some PhD that's rolling along and trying to sound like they know it. They got their game together now that they've, filed a paper and so forth, and got through the gauntlet of the PhD process. And then what they'll say something about relativity, and I'll go, "Have you ever read this paper?" And that is, objects moving on a magnetic field. And they go, "No, I don't think we have. Who wrote that?" And then they look at it and they go, "This looks like a plagiarism." That's the next step they go to. That's a plagiarism. Plagiarism of what? Of relativity. And I go, "No, that's Albert Einstein's paper." And they go, then there's silence. Usually there's silence after that. So now they got to go back and look at the original paper. I just laugh. I love doing that. It's always fun to do that. It's like I like it. They always do the same thing too. That's a plagiarism. That's a plagiarism. All we're doing is trying to watch how things move on a chart. That's all we're trying to do. Nothing more than that. And then what I do is they throw relativity at me, and I throw them the original paper of relativity, which they don't even know the name of, because all they know is the word relativity, and that's it. So anyway, that's me. I just have my fun doing that. I think that's fun. But you can see there on the cable, right there, how we are actually emphasizing that and playing with that, and that's kind of fascinating in its own right. All right, that's cable. We'll see what they do with that, since they did push it into the weekly buy. We don't really believe that there's that much damage going to be done. And let's see if we can find that channel. Where's that channel at? Just as we look at the euro in a channel for like over a year now, the cable's been doing the same thing. I don't see it on this particular chart, but we do have a chart running around here somewhere that shows the cable in a range also. It's like the 38 area, but we've broken down. It's slid underneath that long range that it's been playing with, the 142 to 138. And so now we've seemed to have made new lows in the cable. So there's a little bit more pressure on it. That could literally be the inflation situation, really. And a lot of these adjustments in the channel that's been going on could literally just be the fact that we're seeing inflation, and it's becoming somewhat official now. And since it is, they have to adjust their risk factor. You know, the funds, the institutions, the central banks, they have to do a little adjustment for the inflation factor. So that's probably why we do see channels shifting, where they've drifted up above the channel line and not touched the bottom of the channel line as much as they used to. They probably were ahead of the curve. So in other words, they probably are much more touchy-feely to the inflation that was kicking out than the general media. You know, in other words, you know, for a while there they were fighting it. Remember in June they were fighting the concept of an inflation, and the Federal Reserve's chairman came out with a new name for it, called it transitory, which means it's transiting. Like when you watch a bus go by, or a vehicle go by, or a train go by, it transits past you. And he's saying it's moving, don't worry, it'll go away, just like when you watch a vehicle or a plane or something transit past you. And so that was the flavor of it all. Now we're starting, you know, we're in September now, and we've talked about that, where the transitory doesn't seem to be ending, and we said that in June. So don't be too surprised when you see in August, after Jackson Hole, which again turned in, they found a good way of using the COVID to not have to have that discussion. See, that was what everybody was waiting for. So they were waiting for Jackson Hole, where it's the summertime Davos event. Whereas Davos is in the winter, you have Jackson Hole in the summer. And a lot of the top financial people around the planet get together and have discussions. And I've dodged going to a Davos. I've dodged going to a Jackson Hole. I don't have an interest in yakking with people who think that they're greater than sliced bread. So that is what it is. All right, let's jump over to, from the cable, we go to the Turkish lira. Let's take a quick look at that. That's what I always like to call the dessert. It's always fascinating to see the way, that's probably like a raw, really a raw data stream that is probably more sensitive than we all realize. You know, in other words, when this goes into a trend, it stays in its trend for a while, because, you know, it's very thin, and so, you know, when the sellers start to sell, they can become very predominant, become very dominating in this product more than other products. Let me take a sip of my tea. I had coffee earlier today. Now we're back into the tea season. It's what is it for those that follow in Celsius? What are we? We are 59 degrees Fahrenheit. So that's the, 27 degrees difference divided by 5/9. So basically we're talking about 5/9. So we're really looking at 13 in Celsius today. And so that's been kind of cool, because, I mean, temperature-wise. So it's nice. You know, it's a nice temperature. 12, 13 Celsius in a calm day, no winds. Sunshine, you know, it's nice. Okay, so there's the Turkish lira in the dollar. And you can see the J4X is turning up. Look at that. The white line has started to turn up. We're seeing some strength there. Let's see what it looks like on Chicago Quant. Right there. Right there, there we are. And you can see it's doing the same thing. It's turning up right here. We're seeing that strength. And I want to say, didn't we notice this yesterday? The euro. Did the euro turn up on Friday? I think the euro might have turned up on Friday. Let's see what that looks like. Euro against the Turkish lira. And that should be more sensitive, solely because it's closer. You know, there's a greater opportunity to do import-export compared to the United States. Yeah, there you go. So you can see there on Friday we went into the buy on the euro on Friday. And then Monday's, U.S. close, it was still, matter of fact, you can see some really strange numbers there. Let's give that a Control R. I don't know what that's all about. There you go. They're leaving that in there. Someone put a bad tick into it. And so you can see there it was up again, and today it's up again. So we're seeing that strength come in through the euro against the Turkish lira much more, which seems to be a way more a prelude to the direction. In other words, it's definitely much more insightful. Definitely more insightful. And At the same time, you can see, let's take that back just a little, not take it back, but let's move it back a little bit. Let's tighten it up. There you go. You can see here, we've been in a weekly sell since June 2nd. Is that June or July? No, July 2nd. That week of July 2nd. So up in here, in the 1040s area, 1030s area, we went into the weekly sell. You can see we went into a daily sell here. It went on for a long while. Look at that. It wasn't until like here we went into a daily buy for a couple of days and then right back into the sell again. So it went on to almost the whole month in the euro, just sliding down with that weekly sell. And we always say that's winner, winner, chicken dinner. It pulled you out of it for a little bit, for a couple of days, and put you into another winner, winner, chicken dinner. 2 back-to-back lovely wins. And then, it gave you a warning that the strength was coming in, and it did there. This is much more. I'll tell you, I really like the euro against the Turkish lira. They don't put out a lot of trades. It doesn't put out a lot of signals, but the signals it does put out is very, very, very profitable. Very, very profitable. And you can see here we've started to move up. Now you can see here we're not moving that up that fast in the weekly here. Now let's go back to the dollar Turkish lira, and same situation. It's not moving up that fast whatsoever, just on the daily, on the short term. That's all that is. And then over in J4X, same situation. You see it's trying to turn up on the daily, and we don't really do a weekly on that with J4X, but let's take a look at it on a week-to-week basis and see how that looks. And this has a 70 percentile accuracy rate also. There we are. Let's see, where's that at? Yeah, so went into the hinky ashy here, put the sell into it. You see that pressure. And this is probably like only a day or two behind the weekly of Docs. So, and then you can see it jumped up. We didn't go into a weekly buy in our work there, but that's the problem with using this as a weekly, not Doc's work. But you know what? If you don't have anything, use this. Use the J4X. Steer clear of that mumbo jumbo of the MACD and all that other rubbish, because this is the most accurate way of following it. All right, now from the Turkish lira we jump over to the Canadian. Let's see what the Canadian's doing. They're in election season right now, like we are here in the States. I think they're a little bit more ahead, except for California. They're going to do that recall on September 14th, which is next week, right? Yeah. So 7 days from now, they're going to do the recall in California. That could be pretty entertaining. We'll see how they try to manipulate that. They keep on finding people with illegal ballots, like 300 of the ballots and 500 of the ballots, not on official paper. It's really weird, but that's the unfortunately this cheating in American politics goes on in some states, especially the blue states, with the Democrats. They like to do that stuff. All right, let's get the Canadian up there and me stop satiring. And there it is right there. There's Canadian. And you can see here, where are we on that? That's line 20. So we are 13 weeks now in a sell on the fact check spreadsheet in Doc's work. And you can see, buy, 13. But you can see here, Canadian has tried to go into a sell here on the J4X on a weekly basis. That's why you got to be careful, with it. It's not bad. Not bad. It's sensitive. It's doing a good job. Very good. Let's take a look at the daily there. You can see the daily has been in a downwardly spiral, just like in Doc's work. 4 days there. So let's take a look at it on Doc's work. Right there. So we've been in the sell since right there. And that weekly buy is just grooving and cruising along. We're starting to see some weakness with the blue line breaking down through the time manifold, because we use a 3.5 super on this particular product. All right, what else can we say about that? It's been a quiet day. No one's asking questions. Anybody want to see anything? Just fire it out. We can jump around a little bit in here as I take a sip of my tea. That's good. I'm doing a combination this morning of black tea and green tea. I put the 2 tea bags in and make an interesting brew. Okay. Let's see. Where do we go from here? We go to. What do we do? What to do? What to do? What to do? So there's Canadian. So now what we'll do is we'll drift over to, from this area, we normally go look at the metals and the energies, because when the Canadian is going down against the dollar, in other words, it's becoming more valuable. Usually you see strength in crude oil, or you see strength in gold. So we have a habit of looking at those things after we go to the Canadian. So we won't go through the whole metal sector at the beginning here. We just take a look at 2 things, crude oil and gold, just to get a flavor of what's going on. And then afterwards we'll go back to them and take a look at silver and platinum and copper and all. Let's see, where are you? Right there. And that is, let's put that up there. There is crude oil. Let's show you crude. There we are. See, crude's trying to go into a daily sell today. And you can see, what's interesting is the weekly is trying to go into a weekly buy at the same time. So a little confusion there, which is normally when this is going down, usually Canadian is going up against the dollar, but not today. Maybe it's picking up the longer trend there of that weekly. Maybe that's what we're really seeing there. And then, let's see, where do we go from there? We go over to gold to see what the gold's doing. And we segue ourselves from the gold over to the currencies again, and we go and take a look at the South African rand. There we are. And so there's the gold. You see there's pressure on that this morning. We are through the bottom there. You can see the weekly is holding up very well. Let's take a look at it through J4X. Right there. I'm assuming we'll be seeing the line try to break down through the white line try to break down. Yep, see that? Matter of fact, it's been broken down for a couple days. You can see that pressure on it. And that's the combination of the two. So with this moving down, we're assuming when we go over to the South African rand that we're going to see that going up in value, which is, it has up until last week, I haven't looked at it lately, but up until last week it had a really good trend going on the downside. So it was really reading the strength in the metals complex. Let's go over and take a look at that. Right there we go. There's the South African rand. It's kind of firm today. It's higher than yesterday, but you can see here the weekly's still on a downwardly spiral, and you can see the daily went into a sell up in here, and it's been going down. So it's been a winner chicken dinner, as we like to say around here. And then let's see. So that's the South African rand. So then what we'll do is we'll drift over to the ruble. There's the ruble, same situation, been in a weekly sell, but more of a choppy thing here. Goes into the weekly sell and goes into a daily buy, and climbs up, and then it goes back into the daily sell, and then it climbs back up another day and back into the sell again. But as the weekly's been staying in the sell, so it's been the winners a couple times there, but tough trade. Now you can see today it's trying to climb into the buy. See that right there on the daily, but not the weekly. The weekly still, as much as it's close to the zero line, is still rebelling against it. Now let's take a look at both of these through J4X. First, there's the South African rand, and it's obviously trying to move up, as we showed you before. This will catch up after a while. Yeah, that'll catch up. And then at the same time, let's take a look at ruble. And let me just re-emphasize, this J4X is a very good tool, traders. When you don't have docs work, this is a very good tool to have. And it's hard to have docs work. Be able to look at it live all day long is an expensive process. So, you see docs work live here. So you tune into Dukascopy, you get a chance in the morning to get a flavor of what's going on. And so it's a challenge. I mean, we eat our own cooking, as they like to say. In other words, I'm a trader too. I'm in the same boat all of you are, fighting to make that win every day. And you can see here it's trying to turn up, just like it's doing right here in the Chicago Quant. The strength is kicking in there a little bit. All right. From there, we drift over to the Japanese yen. Let's see what's going on with the yen. Yen is kind of nice and sensitive, just like the way the dollar Swiss is. You can really get a good feel for what's going on in the dollar pairs trades through the dollar Swiss and the dollar yen. They do give you good insight. You see here, it's trying to turn up on the Chicago, the J4X there. That's cool. You see a green hinky going on, hinky ashi. And let's check her out on here. See what they're doing with it. Same situation. See that? That's why we recommend the J4X. All right, and you can see here the weekly has been sideways as all get out. I mean, in other words, it goes into the weekly sell up in here. It goes down, it goes up to it again, goes down, but it's a higher low. Now it's trapped in this channel range altogether. I mean, look at that channel. Ugh. I mean, that'll mess with your head. And so the trade is really, it tells you how the dollar is not going anywhere. That's what it really tells you. The dollar is not really moving. As much as we see some ones on the fact check spreadsheet, the dollar really isn't moving. It's really in its envelope or range, and it's going to stay there. As I think I mentioned it to you earlier, I sent it over to one of the old chairmans. He texted me something. And I said he sent me the three different auctions that are going off in the U.S. market. The bond auctions. So I think it was. Let me tell you what they are, because I thought it was kind of cute that he sent over. He always, some of these guys send over stuff. Just to stay in touch, I guess you could say. So where is that at? Let me find it. There it is. So the auctions today are. Oh, wait a minute. I heard someone in Business News this morning call. This is what I said to them. They call it the bicycle effect. They're doing 20-year bonds, they're doing 2-year floating rate notes, and they're doing 10-year bonds. So, and at the same time, remember the futures contract is getting ready to flip. Matter of fact, I need to switch the September contract to the DEC contract. It's a bicycle effect. This one fellow who I've been following off and on, not off and on, but I've watched him for 30 years maybe. Something Lee, really sharp guy, makes a lot of sense, and he called it the bicycle effect. He says you got to keep on pedaling. If you don't, you fall over. So he said that the central banks and the Federal Reserve are going to keep on printing because they don't have a choice. If they don't, they'll fall over, like in the bicycle effect. So that is what's going on there. Yeah, I think that's kind of cool. The bicycle effect. Keep pedaling, or else. Oy, oy, oy. All right. From there, let's see where we at. So this is the yen, and the last one we look at through this sequence of pairs trades is the Mexican peso against the dollar. So let's see what that's doing. Right there. There we are. As you can see, we've highlighted these two nice moves that have occurred now over the last couple months. And let's take a look at it on J4X. Am I doing the wrong one? I'm doing the wrong one. Let's go right there. Right there, there we are. And this is the dollar against the Mexican peso. And you can see here, this product, is trying to lift up after this nice little slide we've had, just like we did here. See? That's why we use the hinky ashes. They may be behind it, but at least they give you the real healthy trend. Okay? So I know it's delayed, but I mean, that's the way it is. It's not everything can be up to date like Doc. It's the way it works. And this is the best you're going to get when it comes to free public indicators right there. That's exactly it, and it's not bad. I'm telling you, we consider these things leading indicators. I trust them enormously. I look at them. I look at them every day. So it's nice to see the stochastics, the fast moving against the slow. All right, and you can see there, same situation. And you can see we're breaking down again too on the weekly. It closed in a weekly sell last week. Let's make that a little bit more solid like that. There we are. I don't think the Mexican peso can really make that big a move to begin with. I think they're pretty comfortable where they're at. They've noticed the range has been basically 19.5 to 20.5. That's whew, don't you think that the Turkish lira would beg for a range like that? They do have a range like that now, but the thing is the Turkish lira has gone from 1.5 to 8.5, whereas the Mexican peso has been cruising in the mid 19s, low 19s to the mid 21s kind of for a year now. What a nice mellow place to be, and it's been that way for a while too. The Mexican peso, let's just take a look at that on the J4X. It has a good view of. Let's go with the weekly and look at the Mexican peso. It's been very calm, compared to a lot of products. See what I mean? Pretty calm in there. I mean, that's 21. I mean, it looks big, but it's not. That's 20, and that's 21. That's not bad, And it wasn't until the election that it had its issues. And then there's 2019. It was steady. Then it spiked, and it's calmed down. And even so, I mean, that was. I mean, yeah, that's pretty bad. That's. It's not on the scale of the Turkish lira situation, but it is bad. 26 from 20, ouch. That's an inflation battle. Talk about transitory, Oh my God. All right, so that finishes off those pairs trades. So we've done all the pairs trades that we do as a rhythm. Anybody wants to see anything else, like how 47 does that? It comes in and says, hey, I want to see GBP, JPY. If you want to see a particular pairs trade, just put it on the chat line. We'll go look it up. There's no problem there. You don't have to talk to us. You just throw out the symbol. We'll put it up there. There's no problem. You don't even have to type something like, Doc, what do you think? Or this or that. We'll just go look at it and we'll just dissect it all together by ourselves. Or, as a team. As a electronic trading pit. Alright, now, let's see, where do we go from here? Let's jump over to... I guess what we do is we're going back to from here we go and look at the energy sector, and we look at the metal sector, to get a flavor of what's going on there. And that's where we will check that out. So let's go over to there. See, where's that at? Right there. And as you can see, it's moving down. Let's put the gold up on the J4X too at the same time. Right there. And you can see here, we showed you that, having some pressure, but look at the weekly. The weekly's looking awful comfortable, on the upside here. Doesn't seem to want to give it up. You can see here, there's the weekly on the gold. Same thing. Let's go over to the daily. And obviously it's feeling that pressure of the short term. That's why we follow it more on a daily on J4X than we do a weekly. See that break there. And let's take a look at silver. Silver is actually flirting with a weekly buy, which is hooray after 17 weeks, We even have a little dotted thing there. You can see the box right here. It's got a plus in it. Woohoo! And the daily is breaking down a little bit. Aww. It's alright. It gives you a chance to buy lower. Remember, buy low, sell high. People get confused by that thing. A lot of people around here like to do the buy and then buy higher and then buy higher and then buy higher. It's like cannonballing. That's what they refer to it on Wall Street. Cannonballing. Like in kids jumping into a pool or a river, and they all do the cannonballs, and they do it one behind the other, and next thing you know is someone gets injured. cannonballing. You can see here the silver's doing that. Let's take a look at the copper. Let's see what the copper's doing. Right there. Copper's moving down this morning. You see the pressure on it there. You see we're still in a weekly sell, which is really weird. Because, you know, we went into the weekly sell here, I guess it is, this week. You know, right there in this area here. And look at it. It's just been riding above it. Doesn't let go. The daily buy kept you safe. Then it tried to put you into a sell there. Or was it right there? There was a sell right there. And it was a win. And if you didn't do good money management, you gave it up. And then we go into a buy right there. You can't take that since we're in the weekly sell unless you're doing it through binaries or options. And it goes up. And then you get a, there's no sell there until there's a sell it. Well, I guess we're playing with the sell today. And we don't need that buy there. Don't need no stinking buy there. There we are. So let's put that sell up top. And that's what we're seeing there today. It's trying to get back into the sell. And if it does today, then it's, you know, it's basically saying, go ahead, get short. You can get short. So that's what's going on there. It really isn't going anywhere particular. You know, I heard, what is it, they had a Lehman moment in China yesterday or Sunday night. One of their top banks or something collapsed. Let me see. Let's look that up, see if we can find out what's going on there. Yeah, they called it the Lehman moment, like in Lehman Brothers here in the States. We'll find it in a second. It was a good article. I published it. See. Let's see. We'll find it. Doc, we'll find it. I just have to go through my charts here. Did see a great article over the weekend on the Doom, Gloom, and Boom report. I've not seen that in a while. Let's see. Let's see. We're hunting for it. We're going to find this story and we'll put it up on the screen here. At least give you a fighting chance to see it. But yeah, so one of the major banks in China, I don't know if I haven't followed it in the last 24 hours, what they did, if they did anything about it, or they just plowed money back into it, just the way all the central banks do nowadays. I don't see that article. Let's see, where is it at? Huh. I don't see it. Oh, wait a minute. Is that it? Options tail? No. Nope, I don't see it, the article. But anyway, it was in Zero Hedge. Supposedly, one of the biggest bank is doing a Lehman Brothers thing. In other words, they're illiquid. But yeah, I'd imagine that the Chinese government will just plow some money in there and pop it up. I mean, if the U.S. can do it and Europe can do it and the British can do it, you know, for like Lloyd's of London, then they're going to do it too. I don't know why some people get so excited about stuff like this in an era of quantitative easing. It's the bicycle effect, traders. Keep on pedaling or you fall over. In this case here, central banks have to keep on printing or it will fall over. So we're in that era. I heard a money manager this morning say something about it. Didn't say that. They said markets can be very tough, he said. And he says, and these are the times where they're not. In other words, he's insinuating about the central banks. He says, I'm not afraid because they're going to keep on doing this until they can't. So you might as well not worry and be long. And then he started off the conversation with, there is nowhere else to go for an investor. You have to go into the stock asset class. And so you know, and the end result is that the ones that are not participating with this, and they're putting on their collars. When I say put on collars, in other words, protect yourself, use insurance, are making a big mistake, because when this does end, the equity markets are going to have problems, but it may not end for a decade. It may not end for a long time. So you can, we have seen when the Great Depression occurred back in 1929, that went on all the way up until World War II into the 1940s. Okay, and they always say the war brought them out of it, but what really did is they dropped the socialism. They stopped doing the socialism, and it brought us out of it. And so, at this point in time, we're going to see this go on, and the more capitalism it goes on, the less it's going to have an effect on the downside, and it's going to be more positive for the upside. And so they could recede this over time, just slowly taper mildly and not be, dramatic. And, decades from now, the markets will be freer again. But it's not going to be overnight. They're not going to do it overnight. And it's not, why would anybody think they're going to do it overnight? I know that there's always people like, we need to bring back the gold standard, or, like they think that we're going to use this big giant sledgehammer to crush the world economy. It's not going to happen. All right. Where do we go from here? Let's take a look at, we did silver, we did copper, we did gold. Let's take a look at platinum. See if they're actually turning that up. And there it is right there, October platinum, activate. And you can see it's in a daily buy for a while here, since this area here. But we're still in the weekly sell, and it doesn't seem to be, doing anything to really get back up into the buy. So that says to me that, the metals complex is probably going to still stay sideways. Maybe we'll see a little bump here. It's getting towards that holiday season, where, what is it, in India and the United States and Europe, everybody starts to buy presents over the next 2 months. Jewelry and so forth start to kick out, that type of thing. So, what we have here now is we have this, sideways action in the platinum, which says a lot. That's why we can't get the gold right there to really get going in any real strong explosive fashion. Look at it. And it's not exactly exploding in any real direction. It's just chopping. Same thing with the silver. Silver looks the same exact way right there. Where it went into the weekly sell, we're still well below it. And I'm not really confident that we're going to see anything. The central banks, I know, what was it, the Bitcoin, what was it, Costa Rica or Venezuela, I don't know, one of these countries down in South America, came up with something, or maybe it was San Salvador, it might have been San Salvador, came up with, they bought $20 million worth of Bitcoin, their treasury did, and it got Bitcoin crazy. Ran up $1,000. This is over the last 10 hours or something like that, and then it backed off. Now it's at like 51,000. It got up to like close to 52,000, and and then someone said something about this fellow Lee, who I really enjoy over the decades. Said on the Business Channel, he said, some call it a bubble, some call it a pyramid scheme, but as long as there's quantitative easing and printing, then the cryptocurrencies are going to survive. And I totally 100% agree with that. And I mention that here all the time. As long as there's going to be quantitative easing, there's going to be cryptos. And who knows what the how do we say this? The transitory effect. In other words, when the printing does slow down and finally come to an end, the question is, will the balance sheets start to be liquidated? I doubt that. So in other words, they may stop printing more money. They may stop, buying new assets. In other words, they'll stop all that stuff. But will they liquidate the ones that they have? I say no. I say that, I heard Bernanke, in his PhD thesis was this whole event. He did his PhD decades ago in this specific area. And so the philosophy is probably going to be following this will be the Bernanke financial era. When, like they used to say, this is the Arthur Burns financial era. We had a head of the Federal Reserve, I think, before Arthur Burns, the guy before him was like the Fed chair for ever. A long time, through the Depression, the whole bit, And so this is probably going to be the Bernanke era, where the central banks across the planet load up their own private balance sheets, funds, their own positions, and at the same time they have been liquefying the marketplace by printing and buying and and building their portfolios. But even when they stop that, there's more shoes to drop, and that is that they're not going to go and liquidate their portfolio like the next morning. It could be 30 years later, 20 years later. There's been talk, some of the retirees coming out of the Federal Reserve have made statements like, this could go on for 100 years. In other words, it'll be known that you don't liquidate this stuff because no one's on your back to liquidate it. So you don't liquidate it until, say, 2060 or 2090 or something like that. In other words, you let them grow, let them evolve. You let Citibank, the bonds in Citibank, one day will be worth something again, and the stocks will be worth out of this bankruptcy price. People don't realize that Citibank in New York City is not trading much more than what the crash occurred back in 2008. So the stock fell from $61 a share, or the inverse split that they did of $610 a share. Now it trades at like 60 some odd dollars a share. I think that's where it's at. I think Citibank is in the $60. Let me see where Citibank is. But really, in essence, it's only at $6 a share. So it really hasn't, it hasn't had that great a move. And because of that, they could hold on to, Citi for, decades. And then maybe it's $71 now. It's down 33 cents today. Okay? So it's at $7 a share basically. So it's still $54 or $540 off its all-time high. I mean, that sounds really bad then when you think about it. The reverse split. So what they did is for every 10 shares you had of Citi, you only have one share now. They did a reverse split. So in other words, instead of for every share you have 2 or 3, it's the reverse. They went and they shrunk it. So Citi now is trading at basically $7.10, 12 cents a share. Or it's or you can go the other way. It's $540 off its all-time high. Yeah, $540 off its all-time high. Well, Deutsche Bank is the same way. And Lloyd's of London is the same way. And HSBC is the same way. And Bank of Scotland is the same way. And Santander is the same way. And it could go on and on and on, Merrill Lynch is owned by Bank of America. It's not even independent. It was the largest retail broker in the world. It is now was bought for $7 a share by like Bank of America, or $26, or something ridiculously low compared to where it was of $250 a share. And so it's like that everywhere. Same thing with Wachovia. It's the same thing with Bear Stearns. They all were just liquidated at fire sale prices, and those stocks and bonds are sitting in central bank portfolios right now, holding them up even more. And then as time goes on, and J.P. Morgan Chase, who now owns Bear Stearns, as time goes on, they will slowly liquidate some of those bonds and not choke the market. And if it's 20 years from now, or 30 years from now, or 50 years from now, that's what they'll do. They will do that, or they'll let them come to fruition, maturity. So it's a definitely. I know that some people say, "Oh wow, Doc, that's like you're like an encyclopedia," but these are the facts. Just because the U.S. media refuses to talk about it, or your local media refuses to talk about it, doesn't make it not real. It's just that it means that they're just not talking about it. They're just hiding the facts. And so this is a Bernanke era. We're in the Bernanke era. So, all right, that's why the metal complex looks the way it does. Now let's jump over to, where are we going from here? Oh, we go and look at the stock indices. Yeah, let's take a look at the stock indices. Did I look at crude oil? I don't think I did. Let's look at crude oil and natural gas, and then we'll go over to the stock indices. So you see, crude oil is trying to move down a little bit, but our weekly's trying to perk up. And let's put that over on the J4X too at the same time. Right there. And let's go take a look at natural gas right there. There's natural gas. It was knocking itself down this morning. Notice it's slowly picking itself back up again. Obviously, they're starting to think these things are going to become more valuable, not less valuable. Boy, that'll really piss off the environmental, that religion the environmentalists have. So you can see here the daily is still flirting with it, but the weekly has no real deep interest whatsoever. Look how that green line is so high over the time manifold right here, or we might think is Bollinger Bands in a sense. All right, now we drift over to, let's see, where do we go from here? Let's go to the stock indices. Right there. As you can see here, the S&P 500, pretty much unchanged since Friday. Went up a little bit. It was up like 10 or 11 points. Now it's down 3.5 points. NASDAQ 100, same situation. Now it's not. It was up like 50, 60 points. Now it's down. Dow Jones Industrial Average, which was up 80, 90 points to 100 points, is now down 44 points. So we're seeing a lot of weakness across the whole equity thing there. Nothing major. It's going to be like this for decades, just the way it is. All right, this is Doc from North America. We will catch you tomorrow. It's Happy to Hump Day already for us, so it's pretty exciting. We will catch you on Wednesday, and so we got to give a title to this too at the same time. So we'll put a title over to Dukascopy to give a title to this particular webinar. I think we'll call it something like let's see, QE and silver. How about that? Because you can see silver is trying to get into the buy, and it's well worth emphasizing there. And we can also talk about the euro because of the channel it was in. So what we'll do is we'll go with that one. Title. And we're going to say QE, euro, and silver. There we are. We could throw inflation in there, but what's the use of doing it? Because we talked about the inflation, so I don't need to put it in the headline there. All right, this is Doc from North America. Everybody have a safe and healthy trading day. Happy trails to you until we meet again. Happy trails to you, to all our trading Dukascopy friends. Ta-ta for now, traders.